Hello and welcome back to the channel, everybody. So in today's video, we're going to be breaking down my Q3 and Q4 earnings estimate for Tesla post 3-to-1 split. Now, this is actually a video that I was asked to do by one of you guys down below in the comment section of my last video, and it was actually Buster31 who had asked me to make this video. So shout out to Buster31. You guys can thank him down below in the comments section for asking me to make this video. And then if you guys have any videos that you're wanting me to make in the future, please let me know down below in the comments section as well. All right, so now I have my earnings estimate spreadsheet actually pulled up on screen right now. And for those of you that are already subscribed or watched the channel in the past, then you already kind of know what this spreadsheet is and you're pretty familiar with it. Now, for those of you that this is your first time joining us and your first video of mine that you're actually watching, well, first off, make sure you hit that subscribe button down below. But I will go ahead and put a card up here in the actual video so you guys can go and reference a past video of mine where I entirely break down how this spreadsheet works with all the formulas and basically what this spreadsheet really does. But for today, I'm just going to kind of make it simple, and basically all you need to know is we plug in our expected deliveries for the quarter that we're working on, and it's going to spit us out a brand new price target for whatever quarter we are working on. So I'm going to be doing Q3 and Q4 today, just so you're already fully aware of that. But yeah, again, if you want to fully understand how the spreadsheet works, which I highly recommend that you do understand how my spreadsheet works, go ahead and go watch this video that I'm going to leave a card for up in the corner of this video. So with all that out of the way, let's go ahead and jump into this earnings estimate spreadsheet again. And just to kind of give you guys a little bit of a reminder, the way this thing works is we plug in our deliveries that we're expecting for the quarter, and then what will happen is we'll run all the numbers through all of our formulas, and it will spit us out what we're expecting for an EPS for that quarter, as well as a net margin, and then it's going to calculate us a new 12-month trailing EPS, which we will times by whatever EPS we're feeling, or by whatever PE we are feeling like plugging in there today. So as you can see right now, Tesla stock is trading at 108 PE, 12 months trailing right now. And as far as right now, the first number I'm going to have it spit out for us is going to be at 100 PE ratio. So keep that in mind. The PE ratio that we're going to be using for these estimates today is going to be 100. So last time I actually made a Tesla video, I was putting together my own production estimate right here using basically information that I could find and kind of scavenge off the internet, try and give myself the closest idea of what production would be for whatever quarter we're looking at. But you know, I realized just kind of looking around the internet for other people's projections to kind of, you know, self-check my work here to see what other people felt like was possible as far as production in Q3, that my numbers are a little bit high. And so it makes me kind of think that, you know, maybe the way that I'm trying to get everything figured out for my production estimate just isn't the best, and it's just not the best, you know, production estimate out there. But I did find this guy right here on Twitter, actually, called Troy Teslike, and he is awesome. He is doing a really great job at estimating deliveries and production for Tesla over on his Twitter page. So go ahead and go check him out over at Troy Teslike on Twitter. So seriously, huge shout out to Troy. He's doing some great work over there, making my job super easy. Literally just going to steal his estimate right here, plug it into our sheet, and we're going to be able to get a price target. So let's go ahead and do that. Right here, as you can see, his last estimate for Q3 2022 deliveries were actually 368,000 deliveries is what he is estimating right now, which is a little above what the analyst consensus is right now. But I have to agree with him that I do think that higher than 357 is very likely. I mean, as far as the way that I used to estimate things, I was looking at like 411 production being possible. So yes, 367 or 368 rather, I feel like is a very achievable number. So like I had said, we just come over here, go into this cell, and we go 368, 1, 2, 3 to make it 368,000. Plug that in, and boom, there goes some easy math for us. So as you can see, we're using a 2% growth rate as well for our solar and services revenue growth that we're expecting. Usually this runs at about an 8.6. So this is a little bit of a margin of safety right here, saying that we're not expecting the solar and services growth to really happen all that fast. In reality, though, it really does happen quite a bit faster than 2% per quarter. So anyway, we're just being conservative there. But now you can see down here in revenues, we've got a 21, basically 0.1. I mean, we're really close there. If we round it up, it's a $21.1 billion automotive revenue for Q3 that we can expect. Solar and services revenue right at 2.3 billion, which is huge. Total revenues coming in at 23.4 $1.47 billion for Q3 on this estimate. Now, if we look down here at the margins, you can see that we're still going to be using a 32.9% gross profit margin on our automotive vehicle segment. And the reason why is because I still believe that Q2 was very much an anomaly with the Shanghai shutdown and everything that was going on with Tesla in that quarter. So I want to use what Q1's gross margin percentage was, just because I feel like it's a more accurate representation of what we can actually expect to see the company do here. So that will spit us out an automotive margin of $6.94 billion. And then if we come down here to solar and services, you can see we're using a negative 2% margin. And that is because typically over the last 5 quarters, we are actually running a negative margin over here, a negative gross margin over here on our solar and services. So as you can see, that's going to equate to a negative $47.5 million, giving us a total gross margin for Q3 of $6.893 billion. So a 29.36% gross margin. Now that's pretty dang close to that 30% that we're always shooting for, right? Now right here, you can see that over the last 5 quarters, our OPEX, interest income, losses, and taxes usually come to about 14.33%. So that's what we're going to be timesing this by here as well. And you can see that's about $3.364 billion of OPEX, interest, as losses and taxes and different things like that for money that's got to come out of this gross margin, leaving us with a net margin of $3.529 billion, or a 15% essentially net margin. Now what happens here is we drop that down, dilute that by our 3.13 billion shares outstanding, giving us an EPS target for Q3 of 1.13. So that right there is what I'm looking for Tesla to actually come out with when they give us their earning results. I want to see $1.13 EPS diluted for Tesla when we actually get our earnings announcement for this coming quarter. And if that does happen, we should get a new 12-month trailing EPS of $3.42. So we come down here, 100 PE ratio right there, as you can see. That's going to put the stock price at $341.76, giving us a 14% upside from here, essentially, for where the stock price closed on Friday at $299.68. So yeah, a 14% upside between now and our actual announcement of earnings. That's really, really great. And I mean, if it's anything like we had in Q2 when I did my earnings estimate, our estimate was so dead on that actually the day after earnings came out, we wound up having Tesla stock hit our estimated price target for Tesla based on this spreadsheet. So yes, I feel like this spreadsheet is pretty dang accurate, and I really do like using it for estimating my price targets on this company. Now down here, I just have a couple of notes that I'm going to go ahead and go through with you guys, just because I think that it's important to kind of keep these things in mind as far as justifying this 100 PE up here. Because one of the things that we always hear with Tesla stock is people are always like, how do we justify this 100 PE for this company? It really doesn't make any sense, because there's so many other companies out there that have such a lower PE than them, and they have the same margins and different things like that. And if you look at any other automotive company out there, then how do we justify this 100 PE? Well, and the big thing to me that I think justifies this PE is obviously their growth of trying to go 50% every single year over the next few years is going to be insane. So that justifies the PE. We take a look at the fact that they're going to be announcing a new gigafactory likely this year. I think it might be in Canada so far from what all the rumors are saying. On September 30th, we're going to be getting AI Day and maybe see an actual prototype of this Optimus robot. And I mean, that's a huge deal. Elon himself has been saying that the Optimus robot in his mind is going to be a bigger product for Tesla than the cars themselves. And I mean, that's part of what's going into this PE, guys. When people are wondering, why can we get away with 100 PE on Tesla? Well, you have huge innovations over there like this Optimus AI robot that are going to be coming out possibly. And that's something that people get excited for. That's something that's going to drive future growth for the company, helps justify this 100 PE. Now, on top of that, back when we actually had our investor relations conference or whatever, the cyber roundup or whatever they called it this year, they announced that there was probably going to wind up being 8 more factories actually to be able to hit that 20 million vehicles per year by 2030. Now I have to say 20 million vehicles per year by 2030, definitely an ambitious target, but if there's any company out there that I believe could do it, it's definitely Tesla. But I will say that, for myself, I like to have a little bit of margin of safety, so I never do really price in that they're going to hit that 20 million vehicles per year by 2030, just because I feel like it is somewhat ambitious, and especially with us having a little bit of like an economic slowdown right now, I feel like it's going to kind of make it a little bit harder over the next couple of years for Tesla to really hit those growth numbers that they're saying they can hit. Now, I'm not trying to say that I'm a non-believer, because I definitely am. I mean, it's obvious that they have way more demand than they can even, get production across for. And that's really what makes Tesla such an exceptional stock this year, in my opinion, is you have this environment where you're seeing shrinking demand in different companies, but you have a company like Tesla to where they are so dang backlogged with so many orders that even if their demand does slow down, which it has slightly, over the last couple of months, then we still have so much backlog that it's going to allow us to just keep on expanding production and hitting better and better numbers, even while we're in the middle of this little economic macro slowdown right now, while the Federal Reserve is raising rates. Now, of course, another thing we have to talk about is that we're getting closer and closer to full self-driving. We just barely had 10.69.1, and I believe 0.2 might be out now too as well, as far as our beta for the full self-driving. And from watching some videos, guys, I have to say it is pretty dang impressive that there is not very many times that humans actually wind up having to take the wheel on this new version of full self-driving. Again, it's not perfect yet, but Elon has said in the past of this year that he is thinking that we're going to be getting closer and closer to full self-driving, even potentially figuring it out this year. I'm not going to believe that. I'm not going to take his word on that, because he tells us this pretty much every year that he thinks that we're going to get there, but we seem to never get there actually. So, but anyway, I really do feel like as we get closer and closer, that is another piece of the pie that is actually making up and, explaining this 100 PE ratio, or right now 108 PE ratio that we're looking at. But really, when it comes down to it, when people talk about, what really does, justify this high valuation for Tesla, I just want to remind everybody how good the actual peg is on this company compared to so many other companies out there. So if we look down here at this bottom line on all these stocks that I have my projections built out for, with all my different, figures that I like to use to kind of compare stocks here, you can see, that the average peg, 2025 peg, mind you, is 1.8 for these companies that I have in this particular comparison spreadsheet. So if we come down here and take a look though at where Tesla is, you can see that Tesla is actually a 0.92 2025. So Tesla is actually below average when it comes to looking at peg rate. So when people are telling you that 100 PE is unjustifiable, well, when you take a look at the EPS growth year over year and you think about how much CAGR, or compound annual growth, there is going forward for the next 4 years, and then you can look at the peg ratio, well, truthfully, they're not all that expensive. So I kind of hate the fact that so many people just sit there and hang their hat on the fact that the high PE ratio is a reason that Tesla should come down, because in reality, if you ask me, I actually think that Tesla is a relatively good valuation for the kind of growth that we are expecting at the company over the coming years. So now I'm going to go ahead and jump over into my larger spreadsheet, which don't be scared by this spreadsheet, guys. I know it looks basically huge and confusing and scary with all the numbers on it, but this spreadsheet is just basically the big daddy mountain version of this little spreadsheet that we use to make things more digestible. Now, rather than creating a whole nother spreadsheet just for Q4, I like to kind of keep this thing in order, and we kind of go one by one as we make up this spreadsheet as we get closer and closer. So that way I can make a separate video on Q4 later, but I still want to give you guys my current Q4 projection as well, to give you my end of year price target. So right here, again, like I said, don't be all scared about this spreadsheet. It works the same way as this spreadsheet if you're wondering how it works. So I plugged in right here. I'm expecting us to have 475,000 deliveries for Q4 this year, and that would bring our 2022 total deliveries to 1.4 million, which I feel like we really can hit. And if anything, I still feel like this 363 that we're getting from Troy right now is a little bit low. I feel like that number might actually come in over that, and over his track record, he is sometimes low. If you look at his description on his profile, he does come in low rather than high most of the time. So I feel like this 1.402 million vehicles for 2022 being delivered is totally possible. And so with 1.4 million vehicles being produced in 2022, if we scroll down here, we can see my Q4 2022 price target is $416. So that gives us a 39% upside in the stock as of right now. Now, this spreadsheet in particular, one thing that is different is it does use the current 12-month trailing PE ratio. I just haven't ever put in anything in here for me to manipulate this number. I mean, in reality, if we want to take a look at it at 100, I'll just hurry and screw it up really quick for you guys. Throw that in there at 100. Now we can see, okay, 385 would be our price target at 100 PE by the end of this year, which would be a 28.5% upside from here. So now let me hurry and just undo that right there. Okay, cool. But yeah, if we continue trading at this 108 that we've been, we really could see 416, which would be nearly a 40% upside on the stock this year. And again, with all those notes and little things that we kind of talked about as far as catalysts for Tesla that are going on right now, I really do feel like we have the potential to keep our current 12-month trailing PE near 100 or maybe even above 100 for the remainder of this year. So I really do feel like 2022 Tesla is going to be a phenomenal stock to be in if you're trying to shield yourself from the chaos that is 2022 in the stock market for most other companies. And that is just how I feel about it, and that is why I am so dang heavy in Tesla right now. I think right now I'm literally over 50% in Tesla in my private accounts that I don't share with you guys here. Now, of course, I have other money in real estate and other different assets like that I'm investing in at the same time, but as far as like what my portfolio looks like in the stock world, over 50% of it is in Tesla this year, and the reason why is because of exactly what we're talking about here. I really do feel like this company is going to be very well shielded. I really do believe that this company has great upside potential for the remainder of this year. So anyway, guys, if you did enjoy this video, please do me the favor of hitting that subscribe button down below, as well as the like button down below, so that way this video can go out and find even more Tesla bulls like you guys, or maybe some Tesla bears, maybe switch their minds up a little bit for at least 2022. Yeah, if you guys like the content, let me know down below in the comments section. Again, if you have any videos you want me to make, please let me know down below in the comment section as well. And until next time, peace.